I own gold is that if a crisis ever develops, and that is the most liquid thing, I can use that to get through the crisis. Yeah. Same thing for a country. Again, I don't think countries want a gold standard. If countries wanted a gold standard, they would have a gold standard. But I think they want currencies that they can control. But if they get into trouble, I don't think that they're against using their gold reserves, because that's why they have them to begin with. Now, I want to say, I think gold's going to $5,000 over the next probably 5 years. Now, I don't know if it's going to go right there tomorrow. I think recently sentiment got way too high again. Positioning got pretty stretched.
According to leading financial institutions, forecasts for gold's value in 5 years range from $2,000 to $3,000 per ounce. In terms of gold prices, Brent Johnson, CEO of Santiago Capital, predicts a potential increase to $5,000 over the next 5 years. Brent recognizes the U.S. dollar's continued role as the global reserve currency. Despite reservations, he predicts a price increase for gold in the future as a concern over local currencies rather than the U.S. dollar. For a very long time, the U.S. dollar has dominated international markets. It still does so, although during the past 20 years, the U.S. economy has produced a decreasing percentage of the world's production. The latest IMF data shows a decline in the dollar's share in global central banks' foreign currency reserves. Gains in December put gold prices on course to rise between 12% to 14% in 2023. The yellow metal blew past key levels in recent sessions and was now trading less than $100 below a record high hit at the beginning of the month. Gold's recent rally was triggered by the Fed signaling that it was done raising interest rates and will trim lending rates in 2024. Brent asserts that central banks worldwide are acquiring gold as a safeguard against a looming debt crisis. While the sovereign debt crisis that is currently unfolding across the developing world may not have the immediate global impact of the 2008 to 2009 financial meltdown, its long-term effects could be far-reaching. Gold has also been supported by strong central bank purchases of gold. Central banks as a group bought record levels of gold in 2022, and in 2023, they look set to match or potentially exceed those purchases. This is clearly benefiting gold. Furthermore, Brent is bullish on gold for the long term, but doesn't expect an immediate surge, even suggests the possibility of lower short-term prices. Now, we present the clips of Brent Johnson's insights from his recent interview with the J. Martin. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
The reality is, and I know there's a lot of people who don't like this, but the reality is that the US dollar is still the global reserve currency. And if you are operating on the global stage as some kind of a corporate entity or an institution or an endowment, somebody who has a large amount of capital that they're trying to allocate or buy things or invest things, you still need US dollars to operate on the global stage. And countries around the world, they still primarily save in US treasuries. Now, they've been buying more gold recently. I fully agree with that. And I think gold's going to go much, much higher in the years ahead as a result. I think it is symbolic of a bigger trend. I think central banks around the world know that we potentially have this looming debt crisis. They, in many ways, I think central banks hold. I think central banks hold gold for a couple of reasons. Number one, I think they see it as insurance, just the same way maybe you and I do. I think one of the reasons they hold it is because if they hold it, they can control it because nobody else has it, right? So it's like if you put somebody in prison, you control them. Even if you're not planning to do anything with them, just the fact that you have control of them keeps them from other people being able to use it. And the other thing is, I don't think countries around the world are buying gold because they're worried about the US dollar. Okay. I think they're buying gold because they're worried about their own local currencies. The dollar's down. Dollar's kind of flat, maybe down a couple percent for the year, and it's down over the last couple of days, a couple percent. It's still up versus over the last couple of years, it's up dramatically versus all the other currencies in the world. And so the idea that all these central banks are rushing to buy gold because they're so worried about the US dollar, I think they're buying gold because they're worried about their own currencies. They know what problems they have. They know they're going to have to print more of their own currencies to try to fight the effects of this. And, they want to have an insurance policy and kind of a steady reserve, just like everybody else does. And so I would say is if we get into a severe debt crisis, it will not surprise me at all if some of these countries end up having to sell their gold to continue operating on the global stage. Now, I'm not saying that all the central banks are going to come out and sell all their gold, I'm just saying part of the reason that you own gold, part of the reason that I own gold is that if a crisis ever develops, and that is the most liquid thing, I can use that to get through the crisis. Yeah. Same thing for a country. Again, I don't think countries want a gold standard. If countries wanted a gold standard, they would have a gold standard. But I think they want currencies that they can control. But if they get into trouble, I don't think that they're against using their gold reserves because that's why they have them to begin with. Now, I want to say, I think gold's going to $5,000 over the next probably 5 years. Now, I don't know if it's going to go right there tomorrow. I think recently sentiment got way too high again. Positioning got pretty stretched, and I wasn't surprised at all to see this pullback over the last couple of weeks. When you say
recently, you mean last couple of weeks?
Over the just think about it. In October, gold was around 1,800, and as recently as a week ago or 10 days ago, it hit 2,150 or whatever it was.
Yeah,
overnight, pulled back pretty hard from there. We had a really good bounce over the last couple of days. I still think, listen, I own gold. I think everybody should, if you don't own gold, you should absolutely go buy some gold. But I don't plan on it going to $5,000 next year and changing my whole life. I think gold will be there to kind of protect what I already have. I don't think it's going to make me rich. I look at gold a little different than most people. And so I think it's important to own gold, but I would expect gold to go lower before it goes higher. I think sometime in the early part of the year, maybe we can buy it 1,900, 1,800. If you get these pullbacks, I would be a buyer of it. Again, I can't stress enough how bullish gold I am over the long term. I don't think we're going to 2,300 by March or something like that. Now, if we do, I'll raise my hand and say, you know what, we did. And that's why I own it. But I don't mind being wrong if gold goes up.
Despite optimism for gold's rise due to Asian demand, Brent Johnson warns against buying during excessively positive sentiment. Gold prices witnessed a significant rise in Asian trade on Tuesday, fueled by expectations of earlier than anticipated interest rate cuts in 2024 due to soft U.S. inflation data. Meanwhile, he notes that the average Chinese citizen likely buys gold to address economic challenges, like a declining currency, rather than out of concern for the U.S. dollar. China is the world's top buyer of physical gold, and analysts say this year it has been an increasingly important driver behind a rally in global spot gold prices, which hit all-time highs on Monday, 4th December. Brent acknowledges the potential for gold to reach $10,000 and Bitcoin to hit $100,000, but he emphasizes the relative stability of the U.S. dollar compared to other fiat currencies. Let's get back to the interview.
I remember 10 years ago, when gold was about the same price, and it had made a pretty good move over the previous 5 years. From 2002 to 2012, gold did very well, right? And I remember during that time period, a lot of people would refer back to the early 2000s, say that's when central banks were selling gold. It was such an obvious signal. Well, now central banks are buying gold, and everybody's, it's such an obvious signal. Now, why was it such an obvious signal 20 years ago when they were selling it? Why is it also? It's the complete opposite. Why were central banks so stupid 20 years ago, but now they're so smart when they're still run by this kind of the same people? So I kind of get a kick out of the central banks are doing it, so you have to do it when it was the exact opposite 20 years ago. But listen, I think it is indicative that, and the continued demand out of Asia for gold. I think gold is going a lot higher for a lot of the reasons that we've discussed. Whenever sentiment gets really high on something, I automatically kind of like recoil, because when you buy something that it's at its all-time high and everybody's losing their minds and sentiment is through the roof, it almost never works out in the short term. Yeah. And I'm not saying it can't. I'm just saying that's typically not the time to go buy a bunch of it. If I lived in China and I was a Chinese citizen and my currency was the yuan, I'd be buying the hell out of gold as well. I mean, I don't think the average Chinese citizen is buying gold because they're worried about the US dollar. Yeah, most of them are trying to get their money outside the United States and get it outside of China and get it into dollars.
Yeah.
I think the reason they're buying gold is because they know that China has enormous problems. Everybody's talking about the Fed now moving towards an easing policy. Well, China's had an easing policy for 2 years now, and their currency continues to fall. And so I think, and their real estate market is under real pressure. They've got all kind of problems over there. And so, it doesn't surprise me that a Chinese citizen wants to own gold, considering all the challenges they have. But again, I don't think the average Chinese citizen is sitting over there saying, oh man, the US is totally screwed. Let's go buy some gold. I think they're saying, wow, we've got some big challenges here at home and our currency is probably not going to hold up. Let's go buy some gold. The reality is that the system is designed in a way that the dollar will be the last the last fiat currency to fall. Now, it doesn't mean that gold won't go to $10,000 and Bitcoin won't go to 100,000 and real assets go up a lot. So I'm not saying that, but I'm saying on a relative basis, the system is designed in a way that almost nothing is a guarantee in this world, but almost guarantees that the US dollar is the last fiat to fall. And because the whole world borrows in dollars, it does matter when the dollar fiat goes up versus the euro fiat or the Japanese fiat or the Chinese fiat. So sometimes people will say, if I own gold, why does fiat versus fiat matter? Well, it does matter because when the dollar goes up versus these other currencies, that's when you get a crisis. And just go back and look at any crisis and look and see what gold did during the crisis. During the liquidity phase of the crisis, gold gets liquidated just like everything else. Happened in 2020, happened in 2008, happened in 2000. Again, it happens all the time.
The 5-year return on gold depends on market conditions and the time frame considered. Historically, gold has offered moderate long-term returns near 7-12% in average, but past performance is not a guaranteed indicator of future results. What are your thoughts on the future of gold as a reliable investment in the face of global economic uncertainties? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.